What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade management, and closing order. In this video, we are going to cover an iron condor. All right, so we're going to get a new position on today, and we're going to go back into futures and go into something that we knew that we haven't traded before, and we're going to look at the currencies today. Again, this is a smaller size account and a trade that you can do in a smaller size account, $5,000-$10,000 account in a very big product. So the Euro futures are one of the most liquid currency futures out there. Everything is weighted towards the dollar, or at least denominated in dollars. So when you're looking at this, it's trading at $1.13695 per euro. So the euro has been very, very strong. One of the ways that you can kind of just see what the dollar generally is trading at, and this is an index, is by pulling up DXY. If you use this money sign, you can pull up the DXY, which is the dollar index. It's a basket of currencies against the dollar. You can see the dollar has been super, super weak, which if you are trading anything against the any currency to the long side, is positive for that position because they're all denominated in dollars. So dollar goes down, euro typically goes up. Especially if you're trading something that is denominated in dollars, the euro itself doesn't even have to go up if the value of dollars goes down. So euro is at highs or near highs, 113 and change. Now the euro futures are like a $62,500 contract or almost $70,000 contract. So a very big contract here in the futures space. Of course, with options, we can get much, much smaller here. So we're going to look at just trading kind of some neutrals, maybe slightly short delta skewed iron condor in the euro futures here. So you can see we've been around, like maybe 110-ish being the low of this most recent move in the euro. Maybe we'll structure something that kind of plays into that sort of downside. So when you're looking at the options, obviously the tick sizes is something that is a little bit funky if you are used to normal equity options. Now, each tick here is 4 decimal places. It's 5 decimal places you can see here. So they move in 1/2 ticks. So you'll see that it ticks by 5, 4 zeros and a 5 is our per tick increment. It's $6.25 per tick. So each full 10-cent tick is going to be $12.50, which means that if you do a 1 point wide spread here, it's going to be $1,250 worth of total value on that contract or on that spread here per point. So when you're looking at this, it certainly can be a big position, even if it looks very small at 1 tick wide. So we're going to move this and kind of trade this around those bounds that we were looking at. We'll do, and it'll lean slightly short because you're going to be closer on the upside. We're going to do the 116 and the 110 is really what I'm looking at here. On the downside, it's basically a 1 standard deviation. On the upside, it leans slightly short here, just given the move that we've had and where these strikes are placed. So when you look at this spread, again, with futures, one of the benefits that you get here is the span margining. You'll only use about $250 in buying power to hold this position currently today. Now, that can change moving forward. It can get as high as $1,250, which is the full max value of the position, less whatever the credit is that we got on this trade, which is $412 here. But the key is that with span margin and with futures, buying power can fluctuate based on changes in implied volatility, which this has very high implied volatility at an IV rank of 50. It can change based on the duration. So as time passes and your strikes are closer at the money relative to where the futures are trading, that can increase buying power, as well as just the proximity to the strike. So once you get closer to at the money, the position gets bigger, and so buying power can expand. But it's still relatively small of a position with $837 in risk. When you're trading futures, what is really important is to be trading the active contracts. On the tastytrade platform, you can see that this front contract is what is actively being traded right now. That is the M contract. When you are looking at futures, they trade on a curve, so they have different expirations, different contracts that trade along the curve. Now you can see this next contract is trading at 114, so it's higher than where we're at right now. That's because there is a curve to futures, whether it be in backwardation or contango, is going to be specific to each product, not just to currencies themselves. So we're going to go ahead and get a position on here. We're going to try and get filled here at a little about 165 ticks, which is, those half ticks here. So we're going to fill this, or try and fill this right at the mid price, and we can work our way, our order from there. And we'll just move this a tick at a time. And there is some volatility here, and these markets move, so just keep that in mind. All right, so we got filled there at 310 full ticks here on this trade. It'll be a position that has a max value of $1,250. You're only using about 275, and it has about $400 in potential profit. We'll hope to manage this trade for much less than that, maybe $100. Get this one under our belt. So stick around though, but we're definitely going to have to manage this trade. Euro futures taking it on the chin today. We had some tariff news over the weekend. You had the UK deal last week. You had China deal today. You have the market up very, very significantly today. The US dollar has rallied significantly, which is why the euro is down so much today, is because everything is denominated in dollars when you're trading the futures. One way to see just how big this move is in the US dollar is to look at DXY. If you put the dollar sign in, pull up DXY, it's the dollar index. It's a basket of currencies, mainly the euro. The euro is the biggest part of that basket. But it gives you an idea of the dollar strength relative to basically the rest of the world. And so you can see the dollar is up significantly, which, in correlation means that the euro is going to be down. And so we've had a really nice rally there overall over the weekend here. Another thing you can do with the futures contracts is if you type in that same dollar sign and then you go to put in the futures. This is a continuous futures chart. So just to give you an idea of how big this move is and how big the move in currencies has been over the last couple months here, you can see we've had some huge movements in the euro with all the news that has been going on with tariffs and all that stuff. And so, we're kind of getting back to the range that it's been over the last couple years here in the 110-ish range, kind of being that sort of line in the sand. So the euro overall has had a nice little dip, which has led us to a nice little profitable trade here with our iron condor, because we kind of played for a slightly short skewed directional lean in the euro here. But with this 20 some odd days of, or 19 to be exact, 19 days of time decay, a little bit of a vol contraction. Those have both kind of helped us here. So we're going to go ahead and close out our position. One of the things I noticed when I was just looking at this was just how far out of the money this call spread is. I figure that this spread will probably hinder our closing order. So we're going to route this order to close as two separate transactions. We're going to do the call spread, and then we're going to go to we're going to do the put spread and then go to the call spread and route that order. And we're also doing this pre-market. Another benefit to futures is that they trade 24/5. So you have much more access to it in terms of like when you can close and roll or manage these positions. So we're doing this before the equity markets open here for our closing order. So we're going to try and close this out here. take our money and run on this position, and you can, there we go, we got filled. Okay. So we got filled there on the put spread. We're going to go ahead and close this call spread. It's basically worthless, and we'll net out about $100 and change here on our futures position. I have to move this here. There we go. So we closed out of our Euro Iron Condor. It's $112 profit. A nice little trade, something new for the Johnny portfolio, one that we utilize span margin, which gave us a little bit extra leverage, and got into a product that is a little bit different to trade relative to what we're normally used to in the Johnny portfolio. So good little trade there.